Monero hard forks, but the classic chain remains. Not all ICOs are fraudulent according to the SEC. Vitalik burns Justin's son on Twitter. Coinbase to open up an early-stage venture capital fund. South Korea goes crypto-friendly as one of its biggest banks partners with OmiseGO. According to some analysis, Ethereum is at make-or-break levels. The malicious Verge miner made off with over $1 million. And you can now race your crypto kitty to win a prize. We've got all your headlines mixed with some daily market analysis. I'm Elio Trades, and your FUD TV Daily Update starts now. Diving in here on the total market caps, we can see that we are stagnating here around this sort of $250 billion total market cap, actually just under it right now at $248, $249 billion. Yesterday, we were as high as 260, but got beaten back by that resistance. And it seems to be a little bit of some fluctuation here between this 250 or this 245 mark and the 260 mark. That's where we've been for the majority of the last sort of week or two. And then we also have this little, we have a little bit of a run here that we were able to create up to 280, but it seems like for the most part, over the last 7 days, we've really been fluctuating between 240 and 260 and really just sort of ebbing and flowing here, and that probably has quite a bit to do with the Bitcoin chart. Of course, we saw that Bitcoin had dipped as low as 6,500 a few days ago, but it went up to about 7,500 and then right back down, and we're about as low as we've been. We're about the weekly low right now for Bitcoin, which explains why the market is sagging. This Bitcoin price tends to pull the whole market with it, but that doesn't mean that there hasn't been some good performances this week. Obviously, as we covered in our video yesterday, there's been a lot of mainnets and testnets and platforms that have been coming out, and we sort of went over a pretty, not exhaustive, but a pretty extensive list of those that have made some headway. So we'll check out some coins that have been pumping even in this sort of sideways action that we've been getting in the market. And as we look at our biggest gainers in the top 100, we see that Bitcoin Diamond and Elastos are really pumping. Now, Elastos is a pretty innovative project. It's looking to be the, quote, aircraft carrier of DApps, and it's looking to be the aircraft carrier of blockchain-based DApps. It's a pretty phenomenal project, and it's been just doing work. Look, it's just been doing work here with a 14% bump. Obviously, Ontology I just can't even believe that it's still making gains, even in the 5% range. It's not huge, but Ontology is now, looks like it's about to sort of hit this $3 range. I personally am not so happy with this because I was waiting for Ontology to dip a little bit more before taking out my position, and it's not like it's getting too expensive, but it's getting more expensive than I wanted it to get. And I definitely want to have more of this coin than I have. So I'm definitely looking to take out more Ontology position and just seeing its growth. And it was down here at about 127, 105, wow, as early as March 18th. And we saw it get up to this $130 range. And then all of a sudden it just pumped, doubled all the way up to $3, more than doubled. So very, very big week out of Ontology. And it's looking like the sleeping giant is coming awake here. And so all in all, we're looking at mostly sideways action with some small losses on the day. In our lead news out of the day, Monero has just instituted their hard fork. So Monero has followed through on its promise to alter its mining algorithm to essentially disallow the ASIC or application-specific integrated circuits to be able to mine its currency. And the reason for that is because ASICs cause centralization, and they're mostly produced by one company called Bitmain. Now, Bitmain, which is owned by Jihan Wu, put out plans to release their Monero miner, and in response, the Monero community said, no way. But the Monero community also consists of people like Jihan Wu, who are planning to go in and uphold this old crypto algorithm. And so while the coin is going to dive in value, there will be far less miners and far less people using it, and it will sort of allow for this classic, this Monero classic, as the developers, or I guess as I think Bitmain are the ones pushing this name, XMC, they're the ones who are trying to uphold this and make it a legitimate coin, even though Monero is moving on and the majority of the Monero community is moving on. It seems like there will be a small faction of classicers that stay around, just like what happened with Ethereum. So according to the Monero Classic website, they're saying that 80% of the Monero hash rate agrees with their stance and refuses to follow the proof of work change. That is why we declare in advance that we will maintain the original software, which follows the original rules. We reject centralized developer control, and we believe that voluntary participation for both users and miners will uphold principles of decentralization. So what essentially this Monero Classic group is saying is that by forcing this change that you're centralizing power, et cetera, and they're saying that 80% of the Monero hash rate agrees with them, but this is misleading because the reality is that people are very slow to switch over sometimes when updates come out. So the idea that 80% of these people are going to essentially stay on the course and stay in the pool that's going to be crowded with ASIC miners is a bit misleading, and it's probably outright false. This reality is that this is a new battleground, I guess, if you will, sort of similar to the Bitcoin Cash battleground or the Ethereum Classic battleground. Of course, the Ethereum Classic battleground isn't much of a battleground, but the reality remains that we now have a split in the Monero community that could potentially become larger due to this sort of influence of Jihan Wu and Bitmain. So very interesting stuff. And in potentially revelatory news, we have word that the SEC, the Securities Exchange Commission, the head of the SEC, has said that ICOs are certainly not all fraudulent. I know, having researched the topic myself, that there's not a ton of information out there as to what the ICO framework might look like in the United States. In fact, all we've heard about is ICOs getting shut down for fraud and misleading investors and all of these things. We've heard about BitConnect, we've heard about Centra, even though Kevin O'Leary from Shark Tank recently came out and said he's doing a hotel via ICO. So there's certainly some types of ICOs or initial coin offerings that will be acceptable, and it's just a question of exactly what types those will be. The comment came from Jay Clayton, who was doing a talk at Princeton University, and he is the SEC chairman. And he responded to a question, absolutely not, when asked whether all ICOs are fraudulent in the eyes of the SEC. This is extremely promising for people who are developing projects in the ICO space and do require a public offering to get their company off the ground. This could mean that America would be one of the leaders, or at least a hospitable environment for ICOs and innovation within the cryptocurrency space. Fingers crossed, fam. And yes, Vitalik burns Justin Sun on Twitter. To be fair, Justin Sun did post this relatively incendiary post, essentially comparing Tron to Ethereum, saying why hashtag Tron is better than hashtag ETH. 1, 10,000 TPS. This is a little bit misleading because obviously while Ethereum is currently at 25 TPS, they're implementing sharding soon, and they're going to speed up their transactions per second really drastically. Maybe a little bit of a stretch of the truth on that one. Ethereum actually exists in the real world, whereas Tron's in test phase, in sort of incubatory phase, so it's maybe not the fairest comparison. Also, zero fee versus high fee. Yeah, that's a problem, that's fair. Consistent coin burn versus no coin burn, very fair. Java versus Solidity, truly fair. So another thing that Tron points out is that they are actually giving $1 billion in USD to developers as rewards, which is not part of the Ethereum ecosystem at the moment. And of course, they'll have 100 million users, given that they have all these partners that have so many users, and that would be very exciting. That's certainly not the amount of users that Ethereum has. All of these are pretty valid, but again, you're kind of roasting Ethereum, and when you roast, you put yourself in a position to get roasted. 8, continuing his list, better white paper writing capability. In parentheses, Control-C plus Control-V. Much higher efficiency than keyboard writing new content. Okay, so if you weren't following this, Tron plagiarized part of their white paper, and that is a serious no-no. You can't do that. Can't plagiarize the white paper. Vitalik has been extra savage of late, just really taking to Twitter and letting it all fly. So, you know, good. Honestly, I'd say I'm a fan of both of this. I like that Tron's out there making the case for their platform. I like that Vitalik is out there shooting shots back and saying, guess what? You're not the only person with a Twitter handle, and I have something to say as well. The reality is that these are both good projects in my humble opinion, and that they're both contributing to the growth of the cryptocurrency community, whether or not they very much so respect or like each other. I would say that regardless, they're both really positive actors within the cryptocurrency space. And it turns out that Coinbase is going to open up its doors as a venture capitalist or early stage investor in blockchain technology. The COO, Asif Hirji, said that we are going to invest off our balance sheet into cryptos. We will invest in companies that are in the same space and are aligned with our values. This is not so surprising as you see many big tech companies trying to cultivate the next wave of big companies, and in this case, the cryptocurrency community is not that big, and the big sort of more established entities in the space need to cultivate and help grow the next sort of round of ICOs or new coins in the space, new entities, new projects in the space that are really going to contribute to the growth and development of the whole space, and that is what's going to get us through to worldwide or market-wide adoption. Look at all the big tech companies. They all sort of eventually turn from big products into big investment houses as they start owning and cultivating the sort of next generation of technology. What I find really interesting is they're starting the fund at $15 million, which is kind of low for a fund. When you hear about venture capital, usually the numbers are way higher. And I think the reason is that they're not really expecting to make money off this. They're just doing this almost as a charitable sort of a contribution to the community, a community resource, if you will. It's not meant to be a profitable enterprise. They just want to contribute and sort of say, okay, look, we've done so well in cryptocurrency that we know that by helping people a little bit, by getting their ideas a little bit off the ground, it will help bring the whole market forward. And for that reason, we're going to be investing, not because we want to make money, because we know the market needs more love, more help, more guidance. And that is the mentality that helps mature a market. Thanks, Coinbase. And OmiseGO is set to bring South Korean banks onto the blockchain. This month, Shinhan, who is one of the largest South Korean banks, entered into a strategic partnership with OmiseGO, which is an Ethereum-based payments platform. The goal here is to accelerate the adoption and implementation of blockchain technology in Asia, and more specifically, South Korea. Omise and OmiseGO are working to revolutionize the way digital value moves globally, and with an end goal of creating a platform that facilitates a decentralized economy. The first phase of the Wallet SDK was recently released and is available for anyone to use. We want to make it easy for those who need online asset exchange as part of their business to collect seamlessly to the OMG network. You're seeing the mentality emerge that if we can't beat them, let's join them. And we do believe that these partnerships with big banks will sort of form a bridge from where we are today to the future, where we don't really need banks in their traditional form. We need them in this sort of hybridized form to help us manage and provide some financial services. But those services will be very different than the ones today. And like we're saying, as bank services are meant to change, Shinhan is explaining that they're going to have a wallet services where they're going to make and issue private keys and sort of manage them in a vault system. So what are we hearing here? This is a bank sort of trying to come up with services that make sense for the cryptocurrency community. And like I said, people don't want the responsibility of managing their funds. They don't want the responsibility of saying, oh, well, if I lose my money, I lose my money. They want to be able to go somewhere and have their money returned to them. So I believe that this is sort of the beginning of that phase of cryptocurrency where you can start attaching your cryptocurrency holdings to a bank account that is secure or is whatever, and you know that if anything happens to it, that bank will return you your money. We'll see what happens, but I do believe that that's a key missing component of bringing cryptocurrency into the mainstream as a store of value or as a permanent sort of savings method. So according to some technical analysis, Ethereum's right at a key support here where it's been severely oversold, and it could either go into, quote, takeoff or breakout mode, or it could continue to fall here. A lot of TA is finding that Ethereum is extremely oversold right now, and that could have everything to do with EOS really dumping it. We've heard about a few other projects trying to dump Ethereum to drive the price down. But if you're like me, you're eyeing up Ether as a potentially great buy, as this could rocket back up to a sort of $600, $700, $800 mark, though there are critical points of resistance at 450, 500, and 625. And we're not going to go too deep on this because we've been following the story. We just wanted to give you the update that it turns out that $1.1 million in Verge was stolen. The XVG team has been trying to pretend like nothing happened and there's no issue here. There's been a lot of issues with communication, but in the end, a malicious miner was able to successfully steal $1.1 million in XVG Verge. According to the Redditor who first exposed the story, OC Miner, apparently the fix that was deployed by the Verge team isn't actually a fix. He said, quote, the background is that the fix promoted by the devs simply won't fix the problem. It just will make the time frame smaller in which the blocks can be mined/spoofed, and the attack will still work, just be a bit slower. So apparently this has not even been fixed. I don't know what's going on with Verge, but I can say that there is a ton of red flags circling around this project. And if you're in profit or if you have any good gains off of this pump over Verge over the last few days, we'd say you should definitely be taking those profits and figuring out a little bit more what's going on, as there's a lot of uncertainty circling around this project. I know you guys were all wondering, and yes, you can race your CryptoKitty. Kitty Race allows for cat holders to enter their pets in a race against other pets for an entry fee. As with CryptoKitty, specific traits help cats win races. Combined with their timing and other elements of chance, the winner receives everyone's entry fee, minus a small portion used to pay for the transaction. So essentially, this is a way to take your CryptoKitties and actually make them a little bit more useful. I know part of the problem with CryptoKitties was that they weren't really profitable. You essentially had to spend money on them and then they lost value. And because there was no population control and no way to make them make money, it was kind of like they were a dead or a wasted investment, a sunken investment. So this would be a way to sort of take back more value of your CryptoKitty and maybe even win some money with it. So that's pretty awesome. And I'll certainly be racing my CryptoKitty when the time is right. Thanks so much for watching our FUD TV Daily Update. If you enjoyed it, don't be afraid to smash that like button and comment below. Let us know what you thought of our review today. Of course, if you're an investor or enthusiast in the space, subscribing to this channel is not a bad idea, as we do cryptocurrency videos on this channel each and every day. Once again, I'm Elio Trades. It's been an absolute pleasure having you with us today on FUD TV, and we'll catch you very soon on the next episode.